Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts.
Welcome back to Talk Stocks with me, where we turn market noise into clear signals. Before diving into today's technical analysis segment and market summary, let's quickly set the scene with a rundown of the key macro and market events from the past week, June 23 to 29, 2025, that shaped investor sentiment. We begin with the fragile Israel-Iran ceasefire, which lifted risk appetite. On June 24, oil dropped 6%, easing inflation concerns. The S&P surged 1%, the Nasdaq 100 hit record highs, and the VIX tumbled as investors pivoted back into equities. On that same day, June 24, in the House of Testimony, Fed Chair Powell reiterated that cuts depended on further inflation data, and it showed hesitancy. This reinforced policy expectations tied to economic claims, not just the rhetoric. President Trump announced a framework trade agreement with China on June 26, building a top area Geneva and London pact. This will help reduce tariffs and facilitate rare earth mineral and magnet exports to the US. Additionally, on that same day, the S&P 500 hit all-time high, driven by easing geopolitical tensions, healthy birds beyond tech, and a dovish tilt from the Fed communications. Also, on 27th of June, Trump announced an immediate termination of all new trade negotiations with Canada in response to Canada's 3% digital service tax that was targeting American tech firms. Trump threatened retaliatory tariffs within 7 days. Additionally, the announcement rattled the markets. The S&P 500 and the Nasdaq slipped during the day before recovering as the China deal optimism outweighed the Canada tensions. Now, how does this set the stage for traders, investors, or positional traders? Well, it's clear that risk appetite has returned to the market due to cooling inflation and geopolitical tensions. There are also major macro breakthroughs like the China deal, which is providing a strong bullish thesis. And lastly, some clarity from the Fed also gave traders confidence to stay long. Today, we are diving into a chart pattern that smart traders love, and you might too. I'm talking about the cup and handle pattern. This pattern shows up right before a strong breakout, and no fluff. I'll show you how it works, what to look for, and most importantly, when not to rely on them. Imagine holding a teacup in your hand. That smooth rounded bottom, that's the market quietly bottoming out. Then, just as you're about to sip, there's a tiny dip back. That's your handle. This isn't just a pretty shape, guys. This is accumulation in action. Sellers are slowly fading out, and the bulls, they are stretching, getting ready to charge. Now, you see the neckline, which is also the breakout line. This is where it gets exciting. A breakout above resistance, usually backed by a nice pop in volume. That's your signal. Smart traders love it because it's clean, it's calculated, and it often means money. Big money. Now, here's the punchline. With a cup and handle pattern, a trend isn't just pausing, it's changing direction. And when volume confirmed, that breakout can fly. And when I mean fly, I mean it can fly like an eagle. Now, here's the most important part of this video. Smart traders don't start their stock picking process by hunting for chart pattern. That's like putting icing before baking the cake. They use a systemic process. See my video of last week where I talked about rule-based trading. We screen for momentum, volume, sector rotation, relative strength, all the fundamentals of our strategy. Then if a stock we like forms one of these known chart patterns, for example, today's video, which is cup and handle pattern, it becomes a green flag, a confirmation. Guys, remember, these patterns don't lead the trade, they support it. So next time you see a cup and handle, don't chase the pattern. Use it as a signal that your system might have picked a real gem. If you found this helpful, hit the like button, subscribe for more trading insights, and drop a comment. What's your favorite chart pattern and why? Let's talk trading in the comments, please. Now, let's bring the theory to life. I'll walk you through one recent spotting of the pattern, how it is actually playing out using real charts on TradingView. Join me in the next section. On TradingView charting interface, I have on the screen here the Nigerian All Share Index on the weekly time frame. And something that's quite remarkable for anyone who has followed my videos from the beginning of the year, week after week, when I give my analysis on the trend in the market, I can say without a doubt that the ASI has time and time showed bullish trend both in the short term and in the medium term. Now I want to show you how the cup and handle pattern, how I was able to spot it on this chart as early as February. And I remember in one of the chat groups I belong to, I actually called it out there that what I'm seeing on the chart is beautiful, and that if that thesis plays out, because when you spot it, it's an unconfirmed cup and handle, it becomes confirmed when everything you expect based on the theory plays out. And so I called it out that what I'm seeing on the chart, I'm so excited, and I'm sure once this plays out, when it becomes a confirmed cup and handle, we're going to have celebrations, we're going to have so much joy and euphoria within the community. And behold, we got that, it played out, and I've seen so many, the whole chat group, we've all been filled with excitement, and some people are already predicting doom. But again, as a chat technician, as a chat professional, I could envisage it coming. And again, as a chart technician, you already know when the party is going to end, because with every chart pattern, there are measured moves, there are expected measured moves. So let me take you to the chart to show you how I spotted the cup and handle pattern. So right here, where you have this descending channel here, I actually noticed the formation of also a cup and handle pattern here, and at that time it was unconfirmed. So let's see how I'm going to draw it out for you here. Let me pick one of the tools I'm looking for here, which is like a brush, to kind of paint it out. Let's look for that icon. I always struggle sometimes when I'm looking for the icons in a live class. Good. Yes. So can you see the cup now? And this line here is my resistance. So yeah, before drawing this icon, I should have explained some of the lines on the chart. So again, as usual, the white horizontal line is my monthly resistance. At that point in time, it was a resistance right before the breakout. So this was the white lines are key regions or key levels that I drew on the monthly time frame, and the yellow horizontal line is also a key region that I drew on the weekly time frame. So having these three regions mapped out, I was able to see the formation of a cup and a handle. At that time, it was unconfirmed, and my thesis was that if we break out of this neckline, it's not a neckline. If we break out from this breakout point, then we are going to have a rally based on the expected measured move of a cup and handle pattern. And behold, this is what happened. Because we are looking at an index, not an actual stock, you in real life, when you're looking at a stock, you want to see volume confirmation on the breakout of this resistance, because that shows you that yes, there is a new entrant of buyers that are convicted, and that is what will take price up to the expected move. Now, this is the cup and this is the handle pattern that has been confirmed. Now, the next question is, where will this last, or where is it going? Now, as a chart technician, you have measured moves, and the measured move in general for a break of this line is the height or the depth of the cup. And so now you've seen the cup, right? So we can actually pick out how deep this cup is. So if I come to this tool here, and we're going to have estimates, right? Because in trading, it's probability. It's not one value, it's probability. So I'm going to get three ranges here that are potential heights of this cup, and that is what we are going to use to juxtapose from the break point here of where price might rally to before it pauses or stalls. Now, the first point I will want to use here will be this point here, just for convenience, and I would use this here that has the height of my cup. So yeah, let's use this like 10%. Let's use this as the first height. Okay, I can move it down here. Yeah, let's move it. Okay, let's stop there. There's like 11%. Then the next thing I'm going to do is I'm going to clone it. And once I clone it, all I need to do is move it from the breakout point here. You see, and I just overlaid it here where the breakout occurred, and here, this level here, which is 121,547, looks like the expected measured move. So this is the expected measured move on the ASI because of this breakout, this cup and confirmed break cup and handle breakout. So this is my, I would say, one prediction of where price should reach based on this measured move. If I want to look for a very favorable move, I can move this and just take it to the last candle that I see here, which is the low of this candle here. I know it's really becoming messy, but let's make it 12. Yeah, let's make it that 13. So, and I clone that again. So once I clone this, let's clone it, and let's also put it on the measured move. So now this has been cloned. So again, let's move it to this candle here, to the breakout point, and also this is the other potential measured move. And again, so this is how you use the cup and handle pattern. You look for breakouts, and then the depth of the cup is the measured move. So my point here is that you can see that we are very close to the measured move. So my recommendation is, and as a trader, I expect you to be taking profits. The market has done wonderfully well within the last few weeks. You can see how we've been having bullish green candles. So if you're in this market, if you have positions where you are profitable, please lock in profits if you're a trader. If you're an investor, keep doing what you do as an investor. I don't know what you do as an investor, so I can't advise you. I'm a trader. I'm a sniper trader. People know me as a trader, so I'll take profit. So I'll leave it at that. Yeah, I think this brings me to the end. Please remember, this concept also extends to stocks, not only index. It extends to ETFs. Once you see this pattern, they are confirmation that your system indeed has given you a gem. So if previously you were looking for maybe 2% or 4%, whatever it is, you should immediately deploy the measured move. Look at how deep that candle is. Extend it to the breakout point, and if you had underestimated the move up, please use this to make the necessary change on where the potential measured move is. Remember, have different predictions. Don't only go on a very positive, measured moves. Have ranges. Have mean, median, and maximum expected moves. Because at the end of the day, all these are probabilities. So there's a higher probability it will reach the minimum as compared to the maximum. Don't try to play God in the stock market. Work with probability. Don't predict, react. So that's it. The end of today's technical analysis segment on my favorite chart pattern that I like to see on the charts, which is the cup and handle pattern. Before we wrap up this week's market digest, let's review the past week's market performance and infer the presence of either a bullish, bearish, or even absence of any trend from the markets, the instruments that we evaluate weekly. As a reminder, I infer whether the trend is bullish or bearish based on these technical KPIs that I've posted right here on the screen. I use the EMA, the interaction between the close price and the EMA, the plus DMI and the minus DMI, as well as the ADX value. You can have a bullish trend when this condition is met, a bearish trend when this condition is met, then you have a neutral trend when we have the absence of either a bullish trend or a bearish trend. Now I need to mention, within the neutral trend, we have situations where the trend is still emerging. So meaning close price is above 20, plus DMI is above minus DMI, but the ADX is not yet 25. So in some cases, the ADX might be 17, 16, telling you that the trend is developing. I just wanted to call that out. But it's easier for me to just call out trends that are strong. So please, whenever I write bullish or bearish, these are trends that are strong and already developed. Also, just a reminder, the Nigerian market, ASI, has shown consistent strength both in the short term and in the mid term for a large part of this year. So you should not be surprised if we might see some slowdown, but I will let you know as you keep on watching the weekly digest when we are seeing weakness in the trend. So let's begin by looking at the US large cap market tracked by the ETF VOO. This week posted a change of 3.33%, bringing its year-to-date return to 5.22%. The short-term trend on the daily time frame is neutral, while the mid-term trend on the weekly time frame is also neutral. Moving on to the Nasdaq, represented by the ETF QQQ, this week posted a change of 4.04%, bringing its year-to-date performance to 7.21%. The short-term trend on the daily time frame is neutral, and the mid-term trend from the weekly time frame is neutral. US small cap stocks measured or tracked by the performance of the ETF VTWO this week posted a move of 3.35%. Year-to-date, VTWO has delivered a return of negative 2.52%. The short-term trend observed from the daily time frame is neutral, and the mid-term trend observed from the weekly chart is also neutral. Canadian equities tracked by the ETF VCN printed a week-to-date change of 0.83%. Year-to-date, VCN has delivered a return of 7.84%. The short-term trend on the daily time frame is bullish, while the mid-term trend established from the weekly chart is also neutral. The Nigerian equities tracked by ASI this week posted a change of 1.57%. Year-to-date, ASI has delivered a return of 16.58%, which is very impressive. The short-term trend on the daily chart is bullish, and the mid-term trend on the weekly chart is bullish. Furthermore, oil commodity tracked by the ETF USO recorded this week negative 11.98%. Year to date, oil prices have delivered a return of negative 3%. The short-term trend on the daily chart is neutral, while the mid-term trend on the weekly chart is also neutral. Finally, Bitcoin, tracked by GBTC, posted a change of 5.60% this week. Year to date, Bitcoin prices have posted a total return of 13.70%. The short-term trend on the daily time frame is neutral, and the mid-term trend on the weekly chart is also neutral. So to wrap things up, most global markets, including the US equities and Bitcoin, are still in a holding pattern with neutral to slightly optimistic potential in the short term, and the mid-term trends also are also neutral, reflecting cautious sentiment. But we are seeing early bullish signals in Canada and continued strength in the Nigerian market, hinting at localized optimism. As always, stay nimble, stay informed, and let price confirm the story before you act. Thanks for tuning in. If you found this helpful, drop a like, hit the subscribe, and share your market view in the comments. I'll see you in the next one. Chada.